Hey everybody, Smart Silver Stacker here. Hope you're doing well. Welcome to another live stream. So today we're going to examine the price of silver and see whether or not it has hit a bottom in this corrective cycle that we find ourselves in. And I've got several things on the silver chart I want to go over with you today. Before we do that though, before we really delve into the silver price chart, let's examine some of the fundamentals. We got some key economic data released today regarding job openings, and that combined with the FOMC meeting that is coming up tomorrow, which is going to be very important for markets, and silver is no exception there. I think this can give us kind of an idea of, from a fundamental standpoint, where the metals are going from here, because the stage is being set right now for massive money creation. Now, today's jobs opening numbers, they dipped slightly. This headline from Yahoo, job openings dipped slightly in June amid signs of turbulence in labor market. So this is getting kind of reported a couple different ways in the media. Now, job openings came out at 8.18 million jobs open at the end of June. Now, that is a decline. I think it's the second lowest level since Joe Biden took office, but this is also being painted in sort of a good way by the media, by economists, because they're saying this is better than what was expected. They were expecting 8 million job openings. They got 8.18. Now, let's delve into that a little bit. First, let's take a look at the chart. Now, clearly, this is a chart of job openings. It's been declining since March of 2022 in a pretty significant way. Same thing with hires. But I want to show you some of the ways they massage these numbers and make this look better than it is. So for starters, this is not a great picture for the jobs market in the U.S. And this is part of why the Fed is going to have to be cutting rates soon, because there's a lot of softness in the jobs market. But it is worse than what we're being told. And, eventually this is going to become manifest in a way that can't be ignored, and that's going to have a big impact on the easy money going forward. But this is the data from the BLS regarding job openings. So in June of 2024 here, 8.18 million. This is reported in thousands. So this is 8.18 million job openings. But look at the numbers here. Total private sector job numbers, openings, declining every month seemingly. A little bit of variation between April and May there, but they came in at 7.09 million. It's down by about 102,000 from the previous month. But then look at where the jobs openings are growing. Government jobs, right? So total government jobs up 56,000 month over month. A little over 1 million job openings. State and local government job openings up 118,000 month over month. So that's a pretty clever trick if you are trying to paint the economy in a better light than it really is. If you're the government, you just create a bunch of job openings and then say, look, job openings are better than we expected. So, just another example of the way these numbers are massaged and manipulated to really paint a much better picture than what is actually going on under the surface. But tomorrow we do have the FOMC interest rate decision, followed by Fed Chair Powell's press conference at 2 p.m., 2:30 p.m. respectively. And, depending on what Powell says, that could be a major catalyst for the markets, for the precious metals, for gold, for silver. Because right now, all that is really driving things is, of course, the anticipation of more easy money from the Fed. And markets are anticipating that that's going to be the case. Now, this is the CME FedWatch tool for the July meeting, which is tomorrow, or concluding tomorrow. Kicks off today, but we'll get the decision tomorrow. And you can see only a 4.1% chance of even a 25 basis point rate cut. Markets are anticipating that the Fed is going to keep rates where they're at. But I do think that when Powell starts talking tomorrow, that's really the expectation here, is that he is going to set the stage for rate cuts in September. And now at this point, thank you, Art Jogo, for the super chat, sir. The markets are anticipating a rate cut in September 100%. The only question now is it going to be a 25 basis point rate cut, or by September will we have 50 basis points or the equivalent of 2 of these quarter interest rate point rate cuts. Now, the reason that what Powell says tomorrow could be actually bullish for gold and silver is that this anticipation could go up for a deeper rate cut, and that's going to mean even more easy money being priced into the metals. But let's look at the chart of gold and silver here, and let's see if it can give us any indication of what is next. By the way, also today's video is sponsored by SD Bullion. Junk silver premiums remain incredibly low, about 3% over the spot price. If you are stacking right now, this is one of the things I would take a look at. Not financial advice, of course, but this stuff is on sale. So if you want to get some cheap silver, because silver has corrected a lot in the last couple of weeks, I think now is a great opportunity. And premiums remain very low on various bullion products. Now, this is the silver chart going back to 2020, and you can see I've got drawn here. I want to show you several things in the chart today that I think are of interest to silver stackers, silver traders, anybody interested in the precious metals. First, we got this long-term trend, right, from back in 2020. So we are on the long-term chart, an uptrend in the silver market. And that has not been even close to violated any time recently. But let's zoom it in. And this level here, I'm going to actually zoom out just a little bit from there. This is the $26 level, this horizontal line. So we've retested that 1, 2, 3, 4 times, and we broke out, right? And then we actually tested it, came back down in May. So we broke out above that level in April, went all the way up to about just under 30 bucks. Silver price crashed back down to around 26 back in the beginning of May. Maybe not crash, but it's a significant correction, right? And then we had a strong bounce off that level. So that confirms that is now support, what was once resistance. Now, I'm going to remove this real quick, or just hide it. We'll take a look at that in just a moment. I'll tell you what that is. But I want to look at this chart without that. So since that time, we had silver run from about 26 bucks up to almost $33, right, in a very short period of time between May 2nd and May 20th. Since that time, silver has been in a fairly volatile correction and consolidation period. Now, I've got this flag drawn here, which it looks like silver actually broke down below, but it looks now like that was a false breakdown, right? Because today, silver's putting on gains, assuming close above that line. That's actually a bullish indicator for silver, but there is a possibility, and I'm going to outline that for you here, that we could maybe see some lower prices before silver resumes the uptrend. Now, let me pull this back up. This is a Fibonacci retracement. Now, if you're not familiar with that, this is based on the golden mean. Before I get into this, let me just say something about this silver chart analysis, because I do think that there is some value in this information. But, I had some people leave some comments on a recent video that they watched one of my videos with a chart. They went in and bought a bunch of silver, and the price has come down since then. So I have to reiterate, none of this is financial advice, okay? And it can't be, because this video will probably be seen by, thousands of people, maybe tens of thousands, depending on the algorithm. And if you'd like to help with that, smash the like button, of course, and subscribe to the channel. I always appreciate that. But, everybody is different, right? Everybody watching these videos is different. So I'm not trying to tell you to take any particular action based on this information, right? You could be a 20-year-old day trader who's just having fun with a few $100 in the market. You could be a prepper stacker out in a cabin in the woods just looking for the lowest entry point for some junk silver to trade with after SHTF, or you could be a retiree on a fixed income just looking to shelter something from inflation. So look, everybody's situation is different. I'm not telling you to make any particular trades or purchases based on this information, but and also, there's no guarantee that what I'm telling you here is going to be accurate. I'm not even saying silver is necessarily going to do one thing or the other based on this, but it's all about probabilities, right? This kind of analysis. You're never going to nail it every single time, but if you can get an idea of, what the odds are in favor of in the long run, that can help guide your decision making when it comes to stacking silver, watching the silver price. Okay, so this is based on the golden mean. And what I've done here is I've drawn a Fibonacci retracement from this bottom candle here back in May when this rally really kicked off, when it ran from 26 bucks to almost 33 to the very top wick. And now every one of these lines that you see is a retracement level based on the golden mean. And if you're not familiar with that, go look it up on Wikipedia. You know, it's an interesting, it's based on these Fibonacci sequences that show up in nature repeatedly, show up all over the place, and sometimes markets reflect them as well on the chart. And what you can see here is that you've got a couple different levels. You got the 0.618 level, that's this green level here, that's the critical one, and then also the 0.786 retracement level. And the idea is that when something runs up in price and then it retraces, it tends to go to one of these levels and kind of bounce. And you can see that there is some interesting price action around these different price levels. One thing that we saw was the 0.618 level got tested twice here, right? And one thing that you notice, I'm going to zoom in, is that when you had a candle test that line, and then the next day the candle went up, it was the precursor to a run higher. Same thing here. You had this level, you had this candle test the 0.618 level. Then the next day, the green candle confirmed that it was rejected from that level, and you had a nice run up. Now, what's happening today is that we actually just tested the 0.786 level twice. Back on the 25th, that was last Thursday, it tested it. The next day, you got kind of this market indecision up and down. Yesterday, we dropped below it, but we closed above it. It was rejected again. And then today, we're putting on a strong bid. So that is actually a positive indication. Also, the fact that we're closing above the bottom of this channel, that we're about to see a move higher in silver. Okay, so, you know, that's something to consider. However, you also have to keep in mind that this $26 level of support, we could retest that. Right now, I don't think we're going to go any lower than that. Again, it's just my thoughts. But you've also got the 200-day moving average kind of creeping up here, and that's going to provide some significant support. So there's a lot of support in that 2650 to 2680 region. So if we do fall further, I don't think we're going to go much lower than that. So you might say here that the risk reward is in favor of silver at this particular time, in that the move higher that we could see is likely to be more significant, if that's the way it breaks, than the drop. And someone in the chat here says Beirut just got bombed. That's why gold just had a little pump. Yeah, the chart of gold, let's look at that real quick, because it actually kind of gapped up. I'll have to look at that for that news. But yeah, gold gapped up today in a big way, back up to 24.51. So, I mean, we're within striking distance now of all-time highs in gold. So that also is sort of a bullish development for silver. But I want to go back to silver here and show you one other thing. So let me hide this Fibonacci retracement. Let's get rid of that. Now I want to show you something else on the chart. So we're going to talk about a lot of, you know, fairly obscure, esoteric, technical analysis today, but, you know, sometimes that can be fun if you're into that sort of thing. Now, what we just saw in silver was an Elliot wave impulse move higher. Now, the way that works is you expect assets in a bull market to move up in kind of a predictable way with 5 waves. And I'll draw that out for you here. So going back to February, where you saw the bounce off of this kind of long-term trend line, or you could say from late February, right around here, the bull market, or the run-up in silver that we've seen, has taken this 5-wave, kind of a classic Elliott wave, 5-step, 5-wave move up. And what I mean by that is you got the first wave here, okay, then you get a retracement, that's wave 2, then you get wave 3, then another retracement, wave 4, and then wave 5, boom. Now you can go on Investopedia and look up Elliott wave theory if you're curious about this, but the idea now that you have an orderly move upward like this, and this does match the Elliott wave theory quite nicely, you're going to get what's called an ABC correction wave. And so that looks something like this. First wave down, recovery, but not higher than the previous high, which is exactly what has happened here. And then you get a C wave, and that's supposed to be the end of the correction. Now, the question here is, could this C wave drop a little further? And I think there's a possibility it could, right? So you could drop down to maybe the 200-day moving average, the 2650 level, but it would take something major to cause silver to break down below 26 bucks. I think something would have to change fundamentally. Central banks would have to stop de-dollarizing and buying gold, getting into non-dollar assets. The Fed would have to stop printing money, maybe hike rates. I mean, something like that could cause the price to perhaps drop below that. But I think that this is shaping up to look like the C-wave correction is actually over based on today's price action, because in order for this trend to go lower, you would expect it to keep doing that, not to bounce higher, as it looks like silver is doing right now. Now, it's probably a little too early to call that, and I see someone in the chat here saying TA in commodities isn't sound, or technical analysis isn't sound in commodities. Well, look, don't apply technical analysis then. I mean, I tend to think it is. Some people will say that technical analysis in an asset like silver doesn't make sense because silver is manipulated. But the thing is that all factors included, technical analysis, you're just looking at everything that is driving the silver price in a data, representative visual form. And so that includes the manipulation, right? I mean, manipulation is a market force of sorts. And, it doesn't, the people doing the manipulation are human, right? I mean, sure, they could be algorithms, but they're programmed by humans. So TA is based on human psychology, and that is not absent from commodities, nor is it absent from manipulated markets. So, I mean, I still think it's valid. But look, if you don't think so, then don't apply it. I don't know what to tell you. I think that there's room for fundamental analysis in commodities. I think there's room for technical analysis, and I think that the manipulation, while it certainly exists, I think is overblown. And it's not the only factor at work in the markets. In fact, the thing about the manipulation is that without futures contracts, without their ability to endlessly create fiat currency in those contracts, they wouldn't really be able to manipulate the silver market at all. And at the end of the day, even that level of manipulation, their resources are not truly endless, because at a certain point, the ability of paper to manipulate the market could, one, just completely invalidate the paper market, in which case you just see premiums on physical explode because cat's out of the bag. People realize that there's no silver underlying all of that paper. So, I mean, it's a balancing act among the manipulators, is my take. They have to kind of maintain confidence in these markets. So it's not like they can just do whatever they want. Anyway, that's just kind of an aside, but I do think that technical analysis has its place in these markets. And based on the chart of silver right now, I don't necessarily think we can 100% say anything, but I think that it may be premature to say that silver has hit its bottom, but I do think that the bottom is very, very close. And it's also possible that we could see silver take off from this point, especially depending on what Jerome Powell says at the FOMC meeting tomorrow. So this might be a good entry point. It might not be. Again, this isn't advice on what to do. It's just, some thoughts on where the price is headed next. And you'll have to do your own due diligence and make your own decisions for when and where to enter and exit the markets on your own. But hopefully this analysis is in some way, helpful in that process. At least it's something to consider. So do me a favor. Let me know what you think in the chat. Let me know what you think in the comments down below. Tomorrow is going to be an interesting day, so we're going to definitely want to keep an eye on the Fed, and it's possible that silver has hit a bottom here, and if Jerome Powell waxes particularly dovish, which he may do because the markets are experiencing a correction right now. You got another 5% down day in NVIDIA. You got the NASDAQ coming under some pressure. You've had a significant sell-off in stocks. The job market is showing a lot of weakness, and there's an election right around the corner. So the Fed could be more dovish than, one might otherwise expect. And if that's the case, then I think the price of silver and gold are both going to be heading significantly higher soon. Also important to note, based on this Elliot wave analysis here, if this is the bottom of a C wave, correction, then that means when that finishes, we're getting ready for another impulse wave higher, which would take us higher than the previous high of around $33. So something to keep an eye on. Anyway, let me know what you think in the comments down below. Stay safe and happy stacking, everybody. I will catch you next time.